Although Tesla stock is at a current high, experts expect a drop to around $880 before hitting a new all-time high after the New York close. Tesla released its first quarter earnings, which once again beat Wall Street expectations. The leading electric car company reported record profits. While this has many investors excited, analysts say things will get worse before they get better. What can investors expect when it comes to Tesla for the rest of the year? Keep watching to find out. The company generated $3.7 billion in adjusted income, up 30% from the previous record of $2.9 billion set in the fourth quarter of last year. Revenue of $18.8 billion was also more than expected, up 6% from the previous quarter's sales. In early April, Tesla announced 310,000 deliveries during the first quarter. This was a new high, although it was below experts' expectations of close to 320,000. However, we do not see a drop in analyst numbers as a result of this slight estimation error, so we are left with assumptions about the situation in Shanghai. It's hard to see how Tesla will beat its delivery targets. In a note to clients on Tuesday, Wedbush's Dan Ives of Tesla Bolt highlighted some concerns. According to Ives, the main concern for tomorrow is how severe China's production problems are and what that means for deliveries in the second quarter and the rest of the year. Musk and company are in a terrible position because there are so many variables around China's Q2 production that will undoubtedly impact guidance for the rest of the year. So, there was a clear surplus in the stock over the past month. April was a turbulent month as the stock price fell from a high of $1,152 to a low of $972, with several highs and lows around the psychologically critical $1,000 level. What is the source of the disruption, as evidenced by Apple and Microsoft? There has been a shift in investor sentiment away from high-tech stocks. Instead, there are concerns about continued coronavirus-related lockdowns in China. It is also possible that Treasury yields will attract more money away from stocks. However, according to Musk, Tesla Shanghai is making a furious comeback after the quarterly announcement. He said that despite any additional challenges that may develop, he believes we will see record weekly production from Tesla's Shanghai facility this quarter, despite the fact that we are missing a few weeks. Analysts also believe sequential growth will accelerate further later this year, particularly in the second half of 2022, according to the company's Q4 update. Production levels will increase at existing plants, while production at new plants will begin in 2022. Production has already begun at the company's German facility as a result. Tesla's new Texas factory could start producing cars within months. However, because the second quarter has gotten off to a shaky start, things may get worse before they get better. According to Tesla executives, the company lost more than a month of construction volume in Shanghai due to coronavirus-related shutdowns, when weekly production rates at Tesla's Shanghai facility were high in the first quarter. The spike in coronavirus cases has temporarily shut down the factory and parts of Tesla's supply chain, according to the company. Limited manufacturing has recently resumed, and the situation is being closely monitored. As a result, it plans to return to full construction and delivery volume in the second quarter. This will take some time and things could freeze up a bit, causing the stock to take a hit. Moreover, increasing production in new factories takes time. As a result, any impact from Tesla's Berlin factory in the second quarter may be minimal, despite supply chain shortages and production halts in China. Tesla's full-year guidance for 50% growth this year may be conservative enough for the company to easily exceed that range, especially if some supply constraints are eased in the second half of the year, just as production at new factories reaches meaningful levels. Hence, we believe that recovery will come quickly. Tesla stock has been on an impressive winning streak recently. Some passive investors may have been shocked by Tesla's return to the trillion-dollar club. But on the other hand, we were watching it closely, and it was not expected. As a result, despite the prospect of inflation, rising commodity costs and raw material prices, and rising interest rates, the stock rose in March. Likewise, Tesla appears to be benefiting from the recent increase in oil and commodity prices. Tesla's leadership in pricing was proven when it boosted prices. On the other hand, Tesla is trying to meet increased demand rather than reduce it. Tesla's U.S. order books are currently full through 2023, according to Electrek. According to Caijin, Tesla has also added a line to its sales in China. Its purpose is to prevent wholesale buyers from reselling their products within a year after purchase. Wholesale buyers account for 30% of sales, according to Caijin. This restriction was created to reduce speculation in the resale market, which could lead to higher car prices, and whether Tesla would be able to fulfill the contract as a result. We believe Tesla's scale and pricing leadership have greatly benefited from the current macro and geopolitical environment. We expect the stock to recover after this initial decline to an all-time high over the next 12 to 18 months as the remaining competitors struggle to meet their production targets. Despite the ongoing challenges, Musk expects auto production to be similar, if not slightly lower, in the second quarter. On the other hand, the CEO expected production to rise significantly in the second half of the year. Tesla has resumed limited manufacturing and is striving to return it to full production as quickly as possible, despite the setback. Musk believes the company will be able to produce 1.5 million cars this year. Finally, in terms of GAAP, EBIT, and free cash flow, Tesla is a profitable company. Furthermore, Tesla boasted pricing to protect its margins despite rising raw material battery costs, particularly in lithium and nickel carbonate. This instilled confidence in investors that Tesla would be able to maintain profitability despite the supply chain disruptions plaguing its competitors. For example, many leading traditional automakers have announced production halts or guidance cuts. Among them are Volkswagen, Toyota, Ford, and General Motors. Moreover, coronavirus lockdowns and lack of investment in chipmakers have already wreaked havoc on the auto industry. Raw material costs have risen as a result of geopolitical uncertainty, which has exacerbated the problem. Tesla also has strong final demand and strong production volume, which companies are realizing. As a result, battery manufacturers interested in partnering with Tesla will continue to pay close attention. Even CATL, the world's largest battery manufacturer, has revealed plans to build an 80 gigawatt-hour monolithic production plant in the United States. CATL is a key partner of Tesla in China, supplying batteries for the company's vehicles through Giga Shanghai. It is inconceivable that this would put Tesla's U.S. orders ahead of the rest. As a result, we believe Tesla has a significant advantage over competitors in terms of battery supply security. These winning characteristics are likely to be reinforced going forward in 2022. Tesla expects its top and bottom lines to grow by 54% and 57%, respectively, to $82.8 billion and $10.67 billion per share. As a result, many investors are hesitant about Tesla's ability to achieve these goals. Elon Musk's potential acquisition of Twitter is also a wild card for Tesla's future prospects. If Elon Musk's purchase of Twitter goes through, he may be able to use the Twitter platform to create a stronger community of Tesla customers and owners. However, Twitter's board of directors does not appear to be interested in the purchase offer at the moment, so the deal may not happen. So what is the general analyst consensus? According to MarketBeat, the average Tesla stock forecast from 30 analysts is $935.78 per share, with a wide discrepancy between the low estimate of $250 and the high estimate of $1,580. Analysts have widely varying opinions on the fair value of the stock, based on fundamentals versus its appeal among investors. As of April 21, there were 15 buy ratings, 7 hold ratings, and 8 sell ratings for a consensus recommendation of hold. Analysts at Morgan Stanley reiterated their buy recommendation on March 18, with a 2022 Tesla stock forecast of $1,300. On February 14, Piper Sandler, an American investment firm, raised its price target from $1,300 to $1,350 with an overweight rating. Analysts at Sanford Cowan & Company are on the other end of the spectrum. Do you think Tesla stock will fall? What is your target price for 2022? Comment below.